I think we're in the process of bottoming, and my thesis is that we're actually really deep into the winter. The crypto winter really started this time way back at the beginning of 2025. We just didn't notice it. If you would remove that institutional capital, we'd be minus 75%. I think we'll end the year substantially higher than we are today. This is Morgan Stanley, $10 trillion, one of the great financial firms of the world. They're going 500 miles an hour into the Bitcoin ecosystem. It'll be completely normalized.
You bring up a great point. They are going to need to cut because we're going to see a lot of deflation with this AI stuff.
Governments don't like deflation. They always print into deflation, and that always benefits asset price inflation. That's what happened with China entering the WTO. We could have absorbed that through lower prices, but that's not what we do. We absorbed that through printing money, and so we got modest CPI growth, but massive asset price inflation. And I think we're going to see that once again.
Hello, everybody, and welcome back to the Bitcoin News channel. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Matt Hougan, CIO of Bitwise, one of the largest crypto asset managers in the world with over $15 billion in AUM and one of the leading voices in institutional Bitcoin adoption. Matt, how you doing today?
I'm doing great, Rob. Thanks for having me.
Yes, thank you for joining us. It's an interesting time in the market, lots going on around the world, of course. But it's been about a couple of months now that we've been firmly into a crypto winter, as you described it. And I think you've been one of the loudest voices on X and in the media to say, yes, we are in a winter, but it might not be as bad as you think it is. So tell us, what is your current market outlook? Sentiment is so bad, but does that mean that we're bound for a bounce here?
I think we're bound for a bounce. I mean, we're already bouncing. I think we're in the process of bottoming. And as you mentioned, my thesis is that we're actually really deep into the winter. So deep that we may be seeing the first signs of the spring. I think the crypto winter really started this time way back at the beginning of 2025. We just didn't notice it because there was so much institutional capital coming into Bitcoin via ETFs that kept the price. I think we were down 6% in 2025. But if you would remove that institutional capital, the price would have been down substantially. There was huge retail selling. The fear and greed index on crypto got down to 5. We were deep into the freeze. And that's why I think we're probably close to being out of it. So have we necessarily ticked the bottom? I'm not sure. But I'm equally unsure that we'll go back down to 60. I think we're in the process of bottoming. We're on the way up. The market's reacting to good news in a positive way again. And, I think we'll end the year substantially higher than we are today.
And I've heard you say that the biggest alpha opportunities are behavioral, and that what is the biggest gap in your mind between perception and reality right now?
Well, I think it's just that people are ignoring all of the long-term good news. And maybe there's two. There's so many. We could go for a while. They're also ignoring that this is just a classic crypto winter and winters turn into spring. It was funny to me that during a few weeks ago, people were asking, is this winter worse than 2022 or worse than 2018? To me, that's an absurd comparison. In 2022, we had FTX blew up. We had the core infrastructure of crypto collapsing. We had a regulator that was trying to end the industry. This time, we have sort of a classic crypto winter, but regulation is moving in a positive direction. Institutional investors are still coming in. There are other use cases of crypto that are emerging. It's just a much more optimistic perspective. So maybe that's the biggest disconnect is people have been so distraught about crypto. And underneath the surface, the fundamentals are actually really, really strong. I've just been trying to get people to look at it rationally and realize we're actually in a pretty good place.
And yeah, I was first exposed to Bitcoin in 2016, but I would say that 2020 was my first real full cycle. And now it's been 6 years since then, right? And if you look at the last bear market, it was scary, right? There was a lot of sharp falls and a lot of catalysts to really make us go deeper and deeper lower. This one feels more of a wear you out than a scare you out type of thing, right? Especially when you price Bitcoin in gold. Yeah, we haven't gone anywhere all of 25 into this year, right? So talk to us about that, the difference between being scared out and being worn out in a bear market.
I think that's exactly right. Look, I think it was reasonable to be scared out in 2022. Of course, Bitcoin still had its core fundamentals of how it works and the core values of scarcity and its core value of being able to hold it in self-custody through settlement. It had all those things, but it was arrayed against like really strong negative forces. The largest financial fraud in history, which was what FTX was, a US senator announcing a war on crypto, which is almost funny, a regulator that was suing every entity in the space. We could pretend that that doesn't matter to the long-term trajectory of Bitcoin, but it definitely matters to the short and intermediate term trajectory in terms of how we get in a new wave of investors in. It was a scary moment. We have none of that right now. I think you're right. It's sort of wear them out. And I don't even see much of that. What I see when I look at like why Bitcoin is down is I see a bunch of OG crypto investors who had seen Bitcoin go from $100 to $100,000 and had gone from investing 10 grand to having tens of millions of dollars and had lived through crypto cycles before. And they said, the 4-year cycle is coming. I don't want to see a 70% drawdown in my wealth. And so they decide to sell a little bit. I think that's like a perfectly rational response. Doesn't mean they don't love crypto. Doesn't mean it won't be back. People get overhyped about this. The story is still intact. I don't know. It's just shocking to me.
Yeah. And it's funny because when you're in these quote unquote boring times of waiting for it to bottom out, you look for a reason, right? You look for a boogeyman, and we've had multiple, right? You talked about this. We went from Wintermute to Binance to a imaginary Hong Kong hedge fund that blew up, and then the latest one is Jane Street, right? Yeah. So it doesn't matter. Like as long as we can assign blame to someone, it makes people feel okay for that week or so, and then we move on to somebody else. But talk about that, finding a boogeyman, someone to blame. Why is that part of market psychology?
Yeah, absolutely. Because people don't want to look in the mirror and realize that the story is much simpler, which is that a bunch of people who own Bitcoin sold it, right? That is the Occam's razor of what happened to Bitcoin. A bunch of people who owned it sold it because we're still in this 4-year cycle and they didn't want to get hit by that truck. You're right that people have lashed out at all these potential boogeyman. And the funny thing to me about it is that they completely forget about it. The reason I wrote that tweet is like no one remembers that we were talking about CZ or Wintermute or this Hong Kong hedge fund. And they're all of a sudden all certain it's Jane Street. I guarantee you, if the market pulls back again, there's going to be a new boogeyman. I don't know who it is, but none of those are the primary reason that Bitcoin is down. The primary reason is the 4-year cycle still appears to be intact. The good part about recognizing that as the primary reason is that that means that spring will follow winter, just as winter followed fall. And I really want people to sort of understand that, intuit that in their soul, because when they do, they see that this is a pretty big opportunity. Actually, if there's a boogeyman out there, this is a little bit scary. But if there's not, this is just a normal winter and the normal spring is coming. And historically, you've been rewarded for buying at these points. And I think that's what's going to happen again.
But that doesn't get you clicks on Twitter, man.
It doesn't get... No, not in the way screaming Jane Street from the rafters does. That's definitely true.
Yeah. But I mean, there has been talk, of course, now that Bitcoin is institutionalized and that Wall Street is here. Are there any ways for paper games to happen or for quote unquote manipulation? Like, is that a possibility now more so than it was in the past that we're on a larger playing field?
So I can't figure out the math exactly of how that would be the case. Maybe it's worth spending a moment on that to dig into the paper Bitcoin fears. Is that okay? Can we go down that rabbit hole? Imagine you had someone who wanted to go long Bitcoin and there were only 2 products in the world. there was spot Bitcoin, and then there was a cash settled Bitcoin futures contract, right? And then imagine they decide to go with the cash settled Bitcoin futures contract. This is the big worry of paper Bitcoin fears, right? They could have bought spot, but instead they bought this cash settled contract. The way that cash settled contract works is they're going long Bitcoin and someone else is going short Bitcoin, right? So there is a +1 in terms of demand and a -1 in terms of demand, and that nets to 0. But the person who is going -1 doesn't want to be short Bitcoin. If they wanted to be short Bitcoin, they already would have been short Bitcoin. They're going -1 because they can hedge their position by buying spot Bitcoin and then sell that futures contract at a premium to spot Bitcoin. That's what the basis trade is, right? Spot Bitcoin is 67. The futures contract is priced at $67,100. You sell the future, you buy spot. But the net effect on demand is still the same, right? Somebody wanted to go long, and so someone sold a future short and then hedged with Bitcoin. And in the end, that's what happens with this paper Bitcoin. There's a transmission from the paper side down into the physical side because everyone wants to be hedged. Like the people filling that other side are not taking directional bets on Bitcoin. Now, in the micro, in the short term, over an hour, over a day, maybe over a week, there can be people doing complicated cross-correlation bets where they're willing to be short Bitcoin because they're long software stocks or whatever. That happens on the margins. So I don't want to be dismissive of it. Like most conspiracy theories, there's like an element of truth. And there's like a 1 or 2 or 5% element of truth here. But the 95% is it all boils down to spot. So I think that's, again, I really think that's the thing about conspiracy theories. It's like they're always this little piece that, yeah, it has an impact because of this cross-correlation hedging and whatever. But the bulk of it just drives down to spot Bitcoin, and it's not really a thing.
And so the answer to this happening on the margins is just more competition, right? The more firms that take part in this, they're going to arb out the spread, and then things are going to become more fair, transparent, and become more efficient, right?
That's exactly right. And just to add another thing, the other thing it does is it increases liquidity in the ecosystem because it gets more players in the ecosystem. And when I go and I talk to central banks or I go and I talk to insurance companies, they want to see more liquidity in the ecosystem, right? That is part of what gets them into this space. A lot of people wonder why central banks are buying gold, they're not buying Bitcoin. There are a lot of reasons for that, including that they're more comfortable with it, they're slow learners, they move at a very glacial pace. But one of it is that the Bitcoin market is not large enough or liquid enough to absorb those flows, right? So that is the other piece of this, that like liquidity is just strictly good. So the more of these things that exist in the market, the more of that institutional capital will eventually come in.
And come in it shall. So let's get into this institutional demand. Of course, the Bitcoin ETFs are roughly 2 years old now. You guys were a part of this launch, and you guys are sort of a plucky underdog group, but you're punching way above your weight here, correct? So talk to us about that journey of going up against people like BlackRock and truly winning. Everybody in the space really has won over the last 2 years if you got a Bitcoin ETF out there. But you guys have done great. So tell us about the journey for Bitwise over the last 2 years.
Yeah, well, thank you. It's definitely true that when you go into a market with BlackRock, two things happens. One is that they take a significant share because they're a great firm with an enormous brand that people inherently trust. And you just have to accept that that's going to happen. But the other thing that happens is they dramatically expand the size of the market. So am I frustrated that BlackRock has pulled in like $50 billion? Of course, but is my AUM up 15x from before I launched? That is true too, right? So then the question for a company like Bitwise is, how do you differentiate? How do you convince someone to choose you and not BlackRock? And there are a few ways that we've tried to do this. One was out of the gate, we were the cheapest ETF on the market. So we were 25% cheaper than BlackRock. That attracts part of the market. Another is we tried to appeal to people who care about crypto or care about Bitcoin. So as an example, we donate 10% of the gross profits to Bitcoin core developers. That's both because we think it's the right thing to do and a signal that if you choose between these different ETFs, which all just hold Bitcoin at the end of the day, and you care about Bitcoin, go with the one that's donating proceeds to the people who make the Bitcoin network work. So we try to identify with that. And then the third is just there are people who want to deal with a specialist who knows the market. They care about custody. We do things like proof of reserves. We know how to trade Bitcoin better than, I would argue, any of our sort of TradFi peers. We were the first to do in-kind creations and redemptions, right? And there are some people who want to align with that in any market. So we know BlackRock will get their share. I know when I go and give a speech at a Wells Fargo or Morgan Stanley conference that like I'm half working for BlackRock. Half of the money is going to end up with them. They should send me a bonus check at the end of each quarter. But you just have to accept that and then try to carve out your niche. And our niche is a crypto specialist who really cares about this space.
Yeah, and I love the fact that you guys, of course, donate to the open source devs. You give money to Brink, OpenSats, and HRF, and you just donated $233,000. So kudos to you guys. What does that donation process look like? Is it just evenly split up between these organizations? Is there one that you favor? How does it work?
No, our goal was to be as hands-off as we could. The thing you don't want is an ETF issuer telling Bitcoin what to do, right? That's why we actually went with 3 different organizations. It was important that it was both open grants, unrestricted, and that it was distributed across different types of organizations doing different things. So no, it's just equal grants. There's no strings attached. It's just like, here you go. Again, I think it's really important that a company like Bitwise, in my view, are we aligned with where Bitcoin should go? Of course, but we shouldn't be directing what these open source developers are doing with the money. They know better than we do, and they're looking after the infinite long-term good of Bitcoin. Let them cook. But at the same time, you don't want people, from my view, sort of free riding on their work, right? So if we can be a perpetual funding source for this, and that's part of what Bitwise achieves by having a Bitcoin ETF, I think that's just phenomenally good.
Yes, absolutely. The space needs it, right? I mean, if these devs don't get any money, then, I mean, Bitcoin is a software project. It continuously needs to be worked on and updated and maintained. So thank you to you guys for helping out with that.
I appreciate it.
And so when you're talking to institutions, I heard you say that it takes 8 meetings before they will allocate. What's the difference between meeting 1 and 2, 4 and 6, and the last one where you actually make the sale?
Oh, great question. It's different questions. So 1 and 2 are usually very polite. They want to learn the basics of how Bitcoin works. They'll ask about things like how mining works. They'll ask the obvious questions that occur to people, like what happens when you run out of new Bitcoin to be issued. They'll ask for some basic information. 3 through 6 are, I would call, the FUD meetings. The way to think of those meetings is like they hear of something and they want to do a meeting to investigate that. So they'll hear of quantum and they'll want to do a meeting about quantum. They'll hear about environmental concerns and they want to do a meeting about environmental concerns. A few years ago, they might hear about Tether FUD and they want to do a meeting about Tether. But there's usually like 3 meetings that each one is like, I heard something, and you answer it. And then a few weeks or months later, they're like, oh, I heard something else. Once you get through the FUD, the last 2 meetings are about allocation size. How big should I rebalance? How many clients? What's the best way to gain exposure, etc. Once they turn to talking about Bitcoin in a portfolio, that's when you know that they're going to end up allocating. And actually, maybe an interesting thing is it's less important in meeting that they allocate broadly than that they allocate at all. What we've seen, the sort of classic cascade, if you take like a financial advisor, is they'll allocate personally, and then they'll allocate for a few accounts at 1 or 2% because they've been asking about crypto. And then they'll watch it, and then they'll allocate across all their accounts at 1 to 2%, and then they'll allocate across all their accounts at 5%. Those are meetings 9 through 12, but it's almost mechanical. It's this series over and over and over again.
So then you have answers to every side of the FUD dice, Nick Carter's FUD dice. Yes. All right. So then I'm gonna roll the dice right now. Quantum. If somebody comes up to you and says quantum is a problem with Bitcoin, how do you answer that and assuage their fears?
Yeah, sure. I think first you explain why quantum is theoretically a risk to Bitcoin. You make clear that it doesn't challenge the fundamental algorithm underpinning all of Bitcoin, but it could affect some old legacy wallets. You explain that it is a understood risk and that there are people working on it. You can point to improvement protocols. You can point to conversations on Twitter. You tell them about the time scale that this is happening on and the fact that quantum is a threat to traditional banks, to military communications, to the functioning of the internet. There's a lot of advances in quantum resistant cryptography. And then you're just honest with them that, like, look, if you were thinking about quantum as 100% risk to Bitcoin, that's wrong. It's like an incremental risk for this set of wallets. That's a real risk, and we know about it. It's, X years away, and we're working on it. And just like the Y2K bug was a real risk, but we knew about it and we addressed it, the fact that we know about it and are addressing it means that it's not going to ultimately be the harm in this space. But maybe the most important thing there is people think quantum will destroy Bitcoin, full stop. That's their starting point. That's actually the FUD. And so when you start to break it down and explain why it's a risk and explain why it's a risk to these wallets, specifically, it really personalizes it and it makes them understand that it's not like a generic sort of Damocles. It's actually a technical specific risk, and that defangs it and they get comfortable with it.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. And so you're essentially like a Bitcoin teacher, right? You're just an educator a lot of the time, trying to tell people all the different facets of this amazing asset that we've studied for so long here. What have you seen anybody get fully orange pilled, like just go straight deep down the rabbit hole and like become a full-on Bitcoin maxi after you've taught them a little bit?
Totally, absolutely, happens all the time. We've been doing this. We've been doing this for 8 years. So there's some people who have done very well. I heard from an advisor who we helped bring into crypto, who is now surfing in Bali full time. So you do have those sorts of stories. But yeah, it's like anything, right? The thing about Bitcoin is, for most traditional investors, we talked about behavioral bias. I talk a lot about anchoring bias. They have huge anchoring bias on Bitcoin. They first encountered it through Mt. Gox. They first encountered it through Silk Road. They first encountered it through some negative story in the Financial Times. They think of it like poorly. If you can drag them over the line and make them understand what it really is, you do get this zeal of the converted piece. And they start, you see them at conferences and they go fully in. So absolutely, that happens all the time. It's just, it takes a while, right? It takes those 8 or 9 meetings. But yeah, I think it happens more than many people would expect.
And so over the last 2 years, we've seen the growth of these ETFs, and a lot of the Bitcoin that went behind these ETFs were from whales, right? Individuals who had thousands of Bitcoin. Have you met any of these whales? And what are they like? What's the psychological profile of somebody who's sitting on over 10,000 Bitcoin as an individual?
Yeah. Yes, I've met some of them. They're very appreciative of the space. They're still almost exclusively hardcore Bitcoiners, right? When you get that kind of financial reward, you're definitely attached to it. I've seen very few who have like gone to the other side and want to get out, but they're also practical. I think this is maybe the thing that Bitcoiners miss. If they have 10,000 Bitcoin, they have a lot of money in Bitcoin. And they don't necessarily want all of that exposure to be exposed to the volatility that you see in Bitcoin. So they may do some covered call overlay strategies. They may sell a little Bitcoin. That's definitely a big piece. I will say one connecting tissue, this is maybe not surprising, is they hate taxes. And And that's an important part of the story in 2025. I know one of the criticisms of the thesis that it's been these OGs selling is that you can't see it in the data, right? Like the sales from large wallets like stopped in October. They were actually positive in the last quarter, even though. But behind the scenes, a lot of these people are doing covered call overlay strategies against their Bitcoin. And they're doing that because they don't want to sell it and realize the gain. So yeah, a characteristic, maybe not surprisingly, of Bitcoiners, they hate taxes. And so there is this this covered call piece that's really significant.
And Eric Balchunas of Bloomberg has been saying that boomers have saved the day for us, and that if it wasn't for the boomers and the Bitcoin ETFs, we'd be much lower than we are right now. How much weight do you put into that argument?
100%. Yeah, without the ETFs, we'd be minus 70, 75. And you don't have to take my word for it. I mean, they bought, between ETFs and corporations, they bought $75 billion worth of Bitcoin in 2025. And that's a lot of Bitcoin, right? If you took that out, we'd be minus 70, maybe minus 75. I think it's that degree. And it is mostly, boomers is, Eric's very funny. Boomers is too reductive. But it's probably mostly boomers and Gen X people allocating in their brokerage accounts a little bit at a time. Mm-hmm. And we want them in there. The more the merrier. And they're still buying for what it's worth. I know there have been some outflows from ETFs. That's mostly from hedge funds that are retracing from the basis trade. The underlying financial advisors, in my view, have been continuing to buy. And I think if you look at the flows over the last week or so, I think there's signs they're trying to pick the bottom and really accelerate into it. So yeah, Eric's right. Thank the boomers.
And for those who invested back in 24, have they been able to, obviously they haven't sold, so they've been able to stomach the volatility. And is that because they look at it just as a small percentage of their portfolio, or the education's been there? How have they been able to deal with it so well?
Yeah, it's actually that anchoring bias thing. So the thing about the anchoring bias point is that, if I buy NVIDIA stock or not, I may be 51% inclined to buy it and 49 against it. And I'll buy it because it's completely normal from a societal perspective. No one's going to get fired for buying NVIDIA. No one's going to call you crazy or stupid or not smart. But Bitcoin is different. And as a result, before you buy Bitcoin, you need to be like 80% convinced that it's really important long-term. Mm-hmm. I think the people who bought the ETFs were the people who were 80 or 90% convinced. And because they had to be so much more convinced, they're just not getting shaken out by the volatility. They knew it was part of it. They're committed to it long term. And so yeah, I think that's why I think these ETF buyers will continue to be diamond hands, because until it's like socially normal and there's no stigma attached to it, and there still is that stigma in traditional financial circles, you have to be really certain before you jump in. And so once they jump in, they're going to stay in.
So those are the long-term allocators. And you've mentioned this basis trade of hedge funds. So you've said they've gone away, but they might be coming back now. What makes that trade more attractive or less attractive to them over time?
Yeah, so the way it works is that retail people buy futures contracts or leverage positions on Bitcoin. Could be on perps exchanges, could be in the CME market, et cetera. But they're speculating that Bitcoin will go up. And so they want to buy that exposure. And that causes the price to go above the spot price. Again, if Bitcoin is 65, maybe it goes to 66 or 67. And so the basis trade is taking advantage of their leverage upside interest that drives the price of the futures out by selling the future and buying the spot, usually in the ETF, because they like to stay in a regulated format. So anytime retail comes in to bid up the futures market, anytime leverage builds in the system, particularly optimistic leverage, you'll see this basis emerge, and the hedge funds come in to fill that because it's effectively risk-free money, right? They're just arbitraging that price difference. So the reason I said it's gone away is because it's not very profitable. If you can earn as much money buying a money market fund as you can doing this complex trade, you're just going to push the easy button. But if you can make 10% on this complex trade, it's not that complex, but this relatively complex trade, you're going to do that all day. And so as leverage demand, if this rally continues, we'll see leverage build up, we'll see the basis expand, and we'll see flows into ETFs to fund that basis trade.
And when you're talking to institutions, one of the big pitches that BlackRock made back in 24 was that Bitcoin does really good after geopolitical events, right? That it weathers the storm the best and is 60 days later is up much more than gold or stocks are. Is the geopolitical premium coming back to Bitcoin? We're seeing it outperform gold since the outbreak of this Iran conflict. Do you think that people are interested in Bitcoin for those reasons now?
Yeah, I think it's really helpful that it's doing so well post this conflict, whether it's specific to what's happening in Iran and actually a geopolitical premium, or whether it's coincident that Bitcoin had bottomed and rallying. From a narrative perspective, it's showing extremely well. And I think that's actually enormously helpful, particularly because I think one of the reason the vibe was off in Bitcoin was that gold did so well and Bitcoin didn't. If you imagine a world where gold was flat and Bitcoin was in a 4-year cycle, everyone would be like, whatever. The reason people freaked out was because gold was up so much. Now, there was a very easy explanation for why, which was central banks were buying it, China was buying it, and they weren't buying Bitcoin because central banks aren't in Bitcoin yet. But it doesn't matter that it's a logical explanation. It was still a narrative break. And I think one of the reasons this rally may have some sustaining momentum is because that geopolitical hedge narrative sort of resolves that, right? You actually get the reverse of that. The narrative comes back together. And I think that's very powerful for retail investors.
And now we're seeing banks, right? Morgan Stanley is going deep into Bitcoin. They just released their own or announced their own Bitcoin ETF. They are going to do Bitcoin trading and lending and custody. So are we just going to have Bitcoin in our regular old bank accounts soon?
Yes. Yeah. How are people not bullish? This is Morgan Stanley, $10 trillion, one of the great financial firms of the world. They're going 500 miles an hour into the Bitcoin ecosystem. It'll be completely normalized. It's been this outsider asset, right? But it's everything suggests it's just becoming part of the ecosystem. It's becoming part of what macro hedge funds trade. It's becoming part of what brokerages offer. It's just being further and further integrated into the mainstream. And that's great for the long-term story of Bitcoin. If you want Bitcoin to be digital gold, you need it to be in that mainstream conversation. And absolutely, that is those are extraordinary announcements. One thing on the ETF note, Morgan Stanley doesn't attach its names to many ETFs. I think it's like 5 or something. It's a big deal that they're saying the Morgan Stanley Bitcoin ETF, right? That's very different than putting my ETF on their platform, which they're also doing. But this is putting their name next to the word Bitcoin. I think that's an enormous signal. So yeah, we're just going to have it. It's just going to be like everything else in your bank account or your brokerage account or your super app, to use what the SEC wants us to call them. It's just going to be right there alongside.
And you put out this tweet recently. You said, research shows that adding Bitcoin to a 60-40 portfolio improves returns in every 3-year period. So, yeah. Is that the only pitch you need to give now? Just need to hand that to somebody and say, buy my ETF?
That's exactly right. Every 3-year period and 93% of 2-year periods. There's no other asset that matches it. My favorite thing about that study is we first put that out, I think in 2018, and we've used the exact same methodology every year. So in 2018, we were like, look, there's never been a 3-year period where buying Bitcoin didn't boost your risk-adjusted returns. That was like a novel finding, but it's had 8 years of out-of-sample data, right? Like it's still true. And the reason is it's this sweet spot asset. It has high potential returns. It has low correlations to other assets. It's liquid and it's volatile. It's like salt for your food. You add a little bit into your portfolio and you rebalance it and it tastes much better. And the data is just unequivocal. We're looking at every available data point in Bitcoin's professional institutional history. It's an extraordinary result. Everyone should have some, is my basic view. Everyone should have some Bitcoin in their portfolio.
So then what is the worst argument you've heard against Bitcoin in talking to all these institutions?
Oh man, outside of the FUD stuff, maybe that it's too volatile, actually, because the reason that's such a bad argument is you have to consider things in the context of your overall portfolio. It is itself volatile. But like hot sauce on food, that doesn't mean that the whole thing is on. When you put it into a portfolio, what you see is up to about 5%. It doesn't really increase the volatility of your portfolio very much at all, right? So it itself is volatile, but it's zigging while the rest of the market is zagging. So that one is frustrating. Maybe the most frustrating to me are along those lines, where the data just suggests something other than what people are saying. So that's an example where they're like, it's too volatile. And you say, actually, when you put it in a portfolio, you just get better risk adjusted returns. Or they say it's highly correlated to stocks. And you say, actually, if you look at 90-day correlations, it's never been anything other than lowly correlated to stocks. And you're over responding to media narratives that pick up on one-day moves. Just statistically, it's untrue that it's highly correlated to size. It's statistically untrue. So those arguments are frustrating to me because they're not what data show.
And so now I want to talk about building Bitwise itself. One really interesting thing about your firm is that I can name so many of you. I mean, there's Hunter, there's you, there's Ryan, there's Andre. I'm a big fan of Andre. Andre's a great guy. Have hung out with him in Vegas and at PubKey in New York City. He's just super fun, very funny, and of course, brilliant. So is this part of your guys' strategy? Are you guys talking about being on Twitter as much as possible and getting your faces out there so that people know Bitwise and associate it with you guys?
Yeah, absolutely. It's part of what we both enjoy it, and I think it's important. You don't want a company to be one person, is my view, and also companies don't need to be impenetrable. I think if you look closely at Twitter, you'll even see situations where Andre and I disagree. He's probably right most of the time, but we're not afraid of disagreeing and having different viewpoints. It's absolutely part of. We want to be associated, or we want to be thought of as a firm that cares deeply about crypto and thinks deeply about crypto. And we can expose sort of all of our understanding to you. So I think it's the way asset managers should do it. And there have been other great leaders. You know, we think a lot about ARK, certainly what Cathie Wood did there in terms of being fully transparent in her holdings and publishing amazing research is an inspiration to us. So we're trying to sort of follow in those kinds of footsteps. I love that you know multiple of us. We definitely want to be known as having a lot of voices, a lot of smart people out there.
And I mean, you guys also had the only Bitcoin ETF ad that I remember with the most interesting man in the world. And yes. you were in that ad campaign too.
I was in that ad campaign, and I don't like to take credit for things generally, but that the initial spark of that idea of like, we should have the Dos Equis guy. I could actually take credit for that one. And then the team ran an amazing thing. It was so much fun to film that, for what it's worth. The amazing thing about the Dos Equis guy is he's an older gentleman, right? He's 70s or 80s or something. And when you meet him, he seems like an older gentleman. He's a smart, nice guy, but he comes across not unlike like my father. But then he gets on set and he like shoots his cufflinks. And all of a sudden, he really is the most interesting man in the world. It's the most incredible sort of charisma I've ever seen. It was really a phenomenal experience.
Yeah, these good actors, they can just turn it on, you know?
It's crazy. It's crazy.
And another part of your team is that you've got 25 salespeople, which I heard from you is much more than other people in your competitors, right? So what are they doing? Are they going out pounding the pavement? Who are they talking to? And how do they show up in a bear market as well as they do in a bull market?
Yeah, we've been doing this for years. I think it's our secret sauce. There are about half external people who are literally going door to door to advisors, hosting lunches at Morton's Steakhouse, doing the old school education. And then there's an internal team on the phone that's supporting them and doing the same thing. And the most important thing is that they show up in bear markets, right? That we visit our clients and prospects on a quarterly basis, whether the market is up, down, or sideways. And actually, usually where we gain the most traction is showing up when the market is down. We're not afraid of discussing it. We love to provide people context. If you think about these advisors, right, there may be 50,000 of them in the US, 30 to 50,000 of them. They don't have time to think about crypto very much, right? Crypto is maybe 1 or 2% or 0% of their portfolio. They may have 100, 150, 200 clients. Maybe they get to spend a few minutes on crypto every week. We're their source of expertise. So we have to show up, tell them what's happening, answer their questions, help them get allocated. It also is hugely beneficial for us because we get 15,000 touch points a year to learn how advisors are thinking about the crypto market. Yeah, it's really core to what Bitwise does. We extend it for what it's worth. I'll share one more fun Bitwise fact. Our research team, one of the reasons we have all these people that you've heard of is we have a service that answers any advisor question about crypto in 24 hours. So they can ask us anything and we'll write up an answer. And I think that's what people need when they're interacting with a new, confusing marketplace. If you go back to when you first learned about Bitcoin, wouldn't it have been nice to have someone you could know and trust to ask questions? I think that's the service we tried to provide at Bitwise.
And one thing that's become clear in this last bull market is that in order to get to these next milestones of 100, 200, 300K, you need an influx of new money. And so who has a lot of money? Sovereign wealth funds. Are you guys talking to sovereign wealth funds?
Yeah, absolutely. 100%. We talk to sovereign wealth funds regularly. Was exchanging emails with one earlier today as an example. The thing, I'll put you back into that 8 meeting concept. Everyone goes through the 8 contacts thing is one of my Hougan's rule of Bitcoin adoption. A retail person might do that in a week. They might study Bitcoin for 7 consecutive days and the next Monday, and then they're convinced they may allocate. A financial advisor does quarterly meetings. It's really hard to meet with them more than once a quarter because they're busy. So 8 meetings is 2 years. A sovereign wealth fund maybe does semi-annual meetings. 8 meetings is 4 years. A central bank maybe does a meeting every 2 years. 8 meetings is 16 years. This is like the phase at which adoption will go. So sovereign wealth funds are definitely coming. They find Bitcoin attractive, and they're not raising different concerns from my perspective. It's just that they move on a slower cadence than these other touch points. But make no mistake, they're coming right along.
Yeah, we'll see it. I mean, Abu Dhabi, of course, led the charge there, and they've got a large position in your competitor, right? But they're you need somebody to crack open the door, and then the rest will follow, right? We've seen that plenty of times before.
That's a really important point. And it's exponential in scale. So 1 is the biggest step. 1 to 2 is actually hard. 2 to 4 is, can take a period of time, but eventually it gets to everyone. I do think we're working down that ramp. I don't think it's just Abu Dhabi. I think there are more working on it and more coming. So it's going to be one of the big catalysts is nation state level adoption, particularly through the sovereign wealth arms, is going to be one of the sets of new capital that drive us higher. Another one, for what it's worth, is we've barely penetrated the market that drove the 2024-2025 cycle. I think there's $1 trillion to flow into ETFs, not 50, 60 billion. It will just take a matter of time.
It's going to take some time and it's going to take some catalysts. So let's take a little journey down to Washington, D.C. Looking over the Bitwise website, I saw that there's an advisor on your team who's actually nominated to be the next head of the Federal Reserve, Kevin Warsh. What is his relationship with Bitwise? Do you talk with him? And what kind of Fed chair do you think he'll be?
Yeah, absolutely. I've never met Kevin, but Hunter knows him pretty well. And he's been an investor in Bitwise and a great voice for us over the years. So I've heard his counsel through. I don't know if that can persist into the future or not. We'll find out. We're lucky to have those sorts of people supporting Bitwise. I think he'll be a great Fed chair. I think he'll be an interesting Fed chair for Bitcoiners. So, Warsh, for one, I think he's going to cut rates more than most people expect. I think he's a deep believer in AI being a deflationary force, which gives space to cut rates. I think that's an appropriate interpretation of what AI is doing for the economy. And so I think he's more dovish on rates than the market is currently pricing in. What he does want to do is he's not a fan of sort of the Bernanke style expansive Fed. One of the reasons the market freaked out when he was nominated is that he thinks the Fed should be much more constrained. A funny thing is Bitcoiners agree with him. We think the Fed is out of control, But actually, an out of control Fed is probably good for Bitcoin's price. So that's the psychological dilemma we're in. The reason I think he'll be positive for price is that he's constrained in his ability to shrink that balance sheet. There is a level of fiscal dominance at work here. The debt is spiraling. It's not going to be helped by this war. We have huge refinancing needs. I don't care how successful stablecoins are, they aren't the full solution to that problem. And so while I think he's going to be able to aggressively cut rates, I think he's going to be somewhat constrained in his ability to shrink the Fed's size and balance sheet and shift that over to Treasury. But to answer your direct question, I actually think he's a great Fed chair because I do agree with him that the Fed should be more narrow than it has been historically. And he wants that. And so that will be good for America. I just don't know that he'll be able to achieve that with the rapidity that would significantly impact the market on Bitcoin.
You bring up a great fact about Bitcoiners that we do sort of speak out of both sides of our mouths when it comes to the Fed and Fed restraint or go and do the big print, right? We want both. We want the Fed not to exist, but if they are to exist, we want them to print a lot, right?
That's right. The good thing for us is they have to, right? At the end of the day, they have to if they want to or not.
Yeah, I think that's the conclusion that all of us Bitcoiners have come to. But you bring up a great point, is that they are going to need to cut because we're going to see a lot of deflation with this AI stuff. Do you think that AI agents are going to be using Bitcoin?
Yeah, absolutely. Of course. I think they may also use stablecoins, but I think Bitcoin is native to them and will make sense to them. It's global. It's inherently liquid. It's fungible across all borders. It doesn't need AML, KYC. All of these things play into the hands of agents. And I do think this is actually one of the catalysts that drives the Bitcoin and crypto bull market to come, is a recognition that if you're bullish on AI from an agentic perspective, they're going to end up using digital blockchain-based rails. It's just native to them. So I absolutely think that's the case in all aspects of it. I think it's a big deal. I also think from a deflationary perspective, governments don't like deflation. They always print into deflation, and that always benefits asset price inflation. That's what happened with China entering the WTO, right? That was a massive deflationary force. We could have absorbed that through lower prices, but that's not what we do. We absorb that through printing money and spending money. And so we got modest CPI growth, but massive asset price inflation. And I think we're going to see that once again.
And when it comes to AI, how are you using it personally for your work and Bitwise as a whole?
Yeah, I mean, it's been transformative to Bitwise from a data aggregation, analysis, tooling perspective. My dev team on research can now spin up dashboards that I'm interested in monitoring in a matter of hours that used to take months. And that's been extraordinary. From a personal perspective, I use it a great deal for editing, for core research, and then as a thought partner. I think I'm interacting with AI, 15 or 20 times a day. I should be investigating the sort of more coding tooling aspects of it personally. But I unfortunately have these researchers who are extraordinarily good at it. It's easier to ask them to do it. I think I'll regret that in 5 years, but it's the way it's working. But just in terms of, really like the most important impact is being able to create massive clean databases of data and then visualize them. As a CIO, that's enormously powerful. And I feel like we've accelerated 100x over the last 6 months in our ability to do that.
It's insane what's happening on a weekly basis here.
So great. I love it.
It is great. But then you also, we just had Dario come out from Anthropic say that 50% of entry-level white-collar work will be eliminated within 12 to 18 months. Do you think that's a possibility?
Well, maybe that specific possibility, but I think 50% more new opportunities. I'm generally an optimist on those things. I haven't had the personal experience of the introduction of AI creating dramatic amounts of free time for me. I haven't been like playing pickleball a lot or reading. Like what I've found is I can do more work and I have many more things to do. And so I think that's probably going to be the net experience. It's just that people at least for a while. Maybe eventually we term out and we just sit on the beach. But my personal experience so far is it's created more work, not less, and more output per unit of work. And I think that should be the base case. That's what I actually expect to see.
Yeah, it really benefits those with agency, right? Anybody who has an idea and wants to act on it, then this is the best time ever to be alive. So
it's been incredible. I definitely do find myself wishing there were more hours right now, which isn't always true, right? Sometimes it's like, oh, I did my work, I'll take a break. But at least for the last 6 or 12 months, every free minute is like, oh, I could do this, I could do that. And I think you can see that in the cadence that Bitwise is sort of shipping into new areas of the market.
So we took a little detour, an AI detour from Washington, D.C., but let's get back into the Beltway here. We got the Clarity Act coming up, and there's a big fight between the banks and the crypto industry. How is this going to get resolved, and will it happen soon?
Yeah, I mean, you saw the President Trump put his thumb on the scale with an incredible post telling the banks that they were over the line. It was like he had two kids fighting with each other, and they told one kid to shut up and get in line. I've never seen anything like it. That leads me to believe that yes, this will get passed. I think you see that in the polymarket odds. I think it's really positive for crypto if it gets passed, even if it just preserves the status quo of Genius Act on stablecoins, because it puts this concrete floor under crypto regulation. People always ask me, like, what keeps me up at night? An example of what could keep me up at night is a Democratic sweep in 2028 that installs Elizabeth Warren as the head of the SEC. That's not good. And so we want to cement the regulatory progress that we've had and the level regulatory playing field through legislation, so it's resistant to that kind of change. And that's why I hope it passes. I think it passes. And I do think it's a big catalyst that moves us forward. I'll say one more thing on that. A few months ago, when it looked dark on its passage, you started to hear voices in the crypto industry say, this doesn't matter. Well, that was never true. It really does matter because it provides that concrete floor. So I don't think we should be blasé about it. If it doesn't pass, it's a setback. If it does pass, it's a catalyst. And I think it will pass.
And then the other big news coming out of Washington this week was Kraken getting a master account at the Fed. Though it is not a fat one, it is a skinny one, a narrow master account. What does that mean, and what is the benefit for the industry now that Kraken has this?
Yeah, so the short-term benefit is Kraken will be more efficient in processing payments and doing these sorts of things. But I think it's a much bigger deal than that. For what it's worth, this is not a crypto-specific deal. The Fed has been reluctant to give narrow banks master accounts for decades, right? Sort of preserving the large bank oligopoly, particularly post GFC, where you had too big to fail banks. This opens that door a little bit. And even though it's a restricted conditional license, I think it's a massive change. I think it opens the door to narrow banking, to the normalization of crypto. It sort of goes back to what you said. Will we just see our Bitcoin in our bank accounts? Like, basically, yes. This is like the latest sign that yes. And I think it's great. Banks have gotten along for way too long with a huge amount of regulatory capture. And we're starting to see that eroded through stablecoins, through the Clarity Act, maybe passing through Kraken, opening up the door. Also, kudos to them. It's a really big step, and it's remarkable that they got it done.
It is, and they've had their battles with the government over the last 5 years or so. And so for them to come out the other side and be stronger than ever, I think it's a testament to what they've built. Okay, so now looking forward, say 2030, if Bitcoin has done what we think it will do, what does the world look like?
What does the world look like? I think Bitcoin will be relatively well established at that point and beginning to have an influence on the macro economy. And I think you'll start to be able to see a world where the existence of Bitcoin actually constrains central banks and governments from their worst predilections on destroying their local currencies. It won't be all the way there yet. I think it'll take longer than 4 years. but you'll start to be able to project out to that future. And that will be an extraordinary positive long-term for the world when it's able to constrain the actions of governments and central banks. For what it's worth, I'm in a camp of not hoping for hyper-Bitcoinization because I think that there's a painful step to get there. I think a world with a strong Bitcoin that acts as a constraint on abuse of the fiat system is probably the nicest of worlds. If we have to go all the way there, then so be it. But I think that's where we'll be. We'll start to see that's coming in the future, but it'll still be a few years off until it's of scale.
That's the hope, right? That we create this neutral reserve asset that allows for people to go into it if they choose to, and thus puts a constraint on the crazy spending on these governments that just eat away at our purchasing power.
That is right, and have destroyed every fiat currency in history. They have a 100% success rate.
Of failing.
Yeah, of failing.
Okay, and then in closing here, if someone has been watching this and they have some money to invest, but they're waiting for the perfect entry point, what do you tell them today?
Don't. Look, if you're thinking about Bitcoin, what does Pompliano say? If it's worth $1, it's worth $1 million. I think once you accept Bitcoin is here, it's easy to project it into $1 million plus category. And from that perspective, if you're investing for the next 10 years, who cares if it's 70 or 60 or 50 or 80? It doesn't matter. From a behavioral perspective, maybe it matters. You don't want to buy it and then see it drop 20% and then sell it and never buy it again because you'll miss out on a generational wealth opportunity. So I would say, not financial advice, but the way I would approach it is just to dollar cost average it. Take what you're going to invest, divide it by 12, invest every month for 12 months, and you won't perfectly time the bottom, but you won't also suffer this big chop. But don't miss it. These are pretty attractive prices from my perspective. And I think in 5 years or 10 years, they're going to look ridiculous. Just like the price 10 years ago looks ridiculous to us today. And so don't be overly cute. Maybe dollar cost average to help with the behavioral risk and get going into Bitcoin.
Those are great words of advice. Matt, thank you so much for your time. What do you have coming up? Anything Bitwise has on the radar? And how should people follow all of it?
Yeah, we got a lot coming out. We got new ETFs coming. I'd say two things on following us. I write a weekly memo. It's always short, less than 1,000 words generally. You can get it at bitwiseinvestments.com/CIO memo. But also, as you mentioned, I write a lot on X. You can follow me there. The funny thing there is my last name has a U in it. So it's Matt_Hougan, Hougan. I don't know why it has a U in it, but there you go. You can follow me there.
Cheers. Well, that was a great conversation. Thank you so much for your time, and would love to have you back in the future.
Awesome. Let's do it. This was fun.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.